It's Brian Preston, the Money Guy.
Next question is from Madison. She says, I'm 24 and put 3% down on my home. If we're saving 25%, does it make sense to make those extra payments to get to 20% equity to knock off the PMI? Hot button.
Well, it doesn't have to be a hot button issue. Because, it's not. Because, look, first of all, Madison, kudos. That is awesome. 24 years of age, 3% down. Because that's what we've been very confessional that most people, even financial mutants in this office, didn't put down 20% on their first house. Mm-hmm. And in this market, it's especially hard with the way houses have appreciated. The fact that you're already saving 25% of your income. Here's the only thing I have. I'd be curious to know what that 3% down payment, what the mortgage actually is. Is that mortgage under 4.5%?
Yeah, interest rate was going to be the question I had.
Because interest rates are definitely going to have a play. Because I think a lot of us are going to look at these 2.5 to 3.5% interest rates that a lot of people have their houses, and they go, "Whoa, that was a chance of a lifetime right there to have those super low interest rates." And that's why, and what I was bringing it back, why I said, and I don't want to belabor the point. Just go to Financial Order of Operations. You go to moneyguy.com. We have, and go pull up our resources, moneyguy.com/resources. We have free deliverables, 9 steps. Literally, if you're saving 25%, you're already past step 6. You're into the hyper-accumulation where you can look at your 3-bucket strategy, make sure you have money where you want it in the most tax-adjusted way. It also lets you get to step 8 beyond that point, which is, hey, do you have any kids in the house? Do you have any financial goals like fire that need to be accounted for? Because those are prepaid things that you need to be going ahead and planning. And then you notice, look how this is brilliant. Step 9 is paying down those low interest debts like your mortgage. If you feel like just the free resource and me sharing that's not enough for you, go to learn.moneyguy.com. We actually have a deep dive that Madison maybe can even accelerate that even better for you.
Yes. Yep. Everything you said, I love. Can I just throw one thing out? This is just one. This is one young person to another young person, Madison. Once you get to 25%, you're free to choose. You get to choose. If you want to pay that down quickly, do that. Now, I consider myself a bit of a scientist. I like experiments. So I would like for you to think about doing an experiment here. Every $1 that you pay on your mortgage will save you whatever the interest rate is. So maybe it's 3%, maybe it's 4.5%, figure that out. Conversely, I want you to go to moneyguy.com/resources. We have a deliverable called How Powerful Are Your Dollars? And go see how powerful your dollars at 24 years old can be by the time you get to 65, right? Now, here's what I want you to think through. I would like for you to think about doing this exercise. Set a goal in your head. You know that you put 3% down on your house. I would mathematically figure out how much extra am I going to pay down every month to be able to get to 20%, to knock that PMI off. That's why you want to get to 20%. Perhaps rather than paying off the mortgage and actually send those dollars to the mortgage, what if you were to set up a separate account, just like a normal after-tax brokerage account, because you're in the hyperaccumulation stage. And instead of devoting those dollars to the mortgage, you just started buying a low-cost index fund, right? Just you pick your poison on that one and just start building dollars. I would be curious, if you were to do that, would you actually end up at the 20% to actually knock out the PMI more quickly than if you were paying the mortgage off? It'd be a really fun thing to do, because I tell people, yours is specifically around 20%, but people ask this question all the time around paying off the mortgage. I tell people all the time, it is fantastic to be debt-free. It's awesome. It's also really, really cool to have the ability to be debt-free, to have the option to write a check. And I think specifically with where like the market is right now and that things are like super, super on sale, there's a chance if you were just trying to build up that 20% in a separate account, you're going to get to a place, I don't know, a year, 2, 3, 4, 5 years from now, where the value of that account might be so great you could just liquidate it, write a check, and hit that 20% and do it more quickly than if you were just paying off the mortgage directly.
I've got another behavioral hack that you could do.
Okay.
If Madison, if your payment was like $2,011, You could do $2,100.
There you go.
Or maybe
Yep,
you
round
could
up.
also do what Bo is saying, but you could go ahead behaviorally. I know these are some positive things. And maybe you're a person that you could do what Bo says, and maybe instead of 2,100, you round it up to 22 or 24. You choose the number. You don't have to, it doesn't have to be all or
That's
nothing.
right.
You can also do some behavioral hacks that make you feel like, hey, I am getting closer to getting rid of the PMI, but I'm also taking advantage of this incredible opportunity of us being in a bear market, me being in my 20s. How do we put these things together to create really the best version of my financial self?
Madison, I cannot wait for you to reach out in the future to become a client because you are crushing it at 24. That's awesome. In a house, saving 25%, paying extra, you're crushing it.